Hey everyone, today is Thursday, July 23rd, 2020. Let's take a look at the market right now. The market has closed right now is almost 12 o'clock at night. So let's take a look. Today, let's see, the NASDAQ basically 21st, 22nd. So NASDAQ opened. I wasn't looking at the market today. So the NASDAQ opened flat and just went straight down, right? So right now in the after hour trading after 4 o'clock, the market's still down even more than its closing price. So this market looks shaky. Like today, I just look at my watch list, everything's just red. Not a good sight, but it seems the cryptocurrency market is doing pretty well today. But we don't know if that's a pump and dump, right? Because the general right now all the markets are driven by liquidity, and it seems that in the United States unemployment rate is becoming unsustainable, and of course the Fed is doing its best to pumping in money to the economy, but we don't know how long that's going to last, right? And you can see that this one, the NASDAQ, has been following this line. You see that? This trend line very closely, and every time it touches the trend line, it bounces off. So we're gonna see this thing going to the 10,333 level. Tomorrow, maybe we're gonna retest it and bounce off, and maybe this time it won't bounce off and just go straight down. We don't know, and it's really a Russian roulette, this kind of scenario. So I'm gonna leave this line there just to keep track of it. Okay, so let's see. So the NASDAQ again, this thing has a expanding volatility. You can see that the volatility is obviously expanding. I think this line could be the best way to describe the current market. The expanding volatility. So you can see the volatility was lower here, but then the range is getting bigger and bigger. You can see that, right? Then when the range getting bigger and bigger and bigger, it becomes unsustainable. You can see that the volatility accumulates and expands quite a large expansion here. So you can, I think right now the market is fairly healthy. I don't see too much at risk, but we shall see, right? Maybe it's going to consolidate. Okay, so let's take a look at the cryptocurrency market right now. ETH right now is, today went up a little bit more. And we haven't really retested this level, so I'm just gonna remove this. So we might come down retest, but my educated guess is that right now all we need to have to figure out is whether is this coming for a real breakout to the upside that's going to break this level, go above the 286, and then try to go above 361. Is this gonna be going straight up, or this is just gonna be another kind of a fake kind of pump and dump? And because the general markets right now is not doing well, the NASDAQ's not doing well, the crypto market today has a divergence from general stock market. It tells me that it could be a pump and dump, right? If the general market goes down even further, I think the crypto market is going to drag down along with it. And I mean, this kind of move is not uncommon when you have a consolidation that looking like a triple top. You can see that this, I was thinking maybe this was a triple top, but it didn't. The price just zoomed through it. So this thing never happened, right? this scenario. But historically speaking, when you have this kind of a fake triple top pattern, it goes up. Basically, it has a short squeeze right here, right? Because a lot of short sellers are probably shorting around the 248 level, and when the price zoom above it, all these short sellers are forced to cover. But now, by this time, the short sellers have covered already. Right now, it's just a bunch of longs are chasing this price action, thinking that we're gonna break out to even further. And this might not happen, right? Because right now all the short sellers are out of the market. They obviously squeezed. All the if you look at the price, we have a huge spike that happened within like 5 minutes. You can see this spike above the this major resistance of 248. I'm gonna draw hold on. Again, so a lot of people are shorting. They're thinking this is a triple top. And around 249, 248 level, right? So that's where their stop losses are. And you can see that's exactly what happened. There's so many people's stop loss got hit, and the price is going to just literally zoom through that range, causing everyone to force to cover. And that is a huge kind of basically a gap up, right? And it happened within, I think this is 5 minute time frame. You can see this is 5 minutes bar. So in 5 minutes, the market moved, 8% due to short covering, due to massive amount of short covering. And basically that's what happened. And this horizontal range basically allows more people to cover their short positions. And now everyone pretty much covered their shorts. I'm pretty sure there are some stubborn, people who got forced out here. Like, they probably. I'm pretty sure all the short sellers are covered now. Are pretty much covered now. They're squeezed out of the market. So right now we had a second spike up today, which is way less in magnitude, and happens much slower than the first spike. So this was only a 5%, 6% move. And you can see that the market is slowly drifting down right now. So at this point, we have a lot of greedy, longs are trying to chase this price move. They're thinking that we might break out. In my opinion, I think this might be a pump and dump. I'm still suspecting this is a pump and dump, just because the logic behind this. And I've seen this kind of pump and dump before. Let me just show you something. For example, Microsoft. There are things like this. For example, let me find it. Oh, for example, this, right? On 2000, the 2000.com bubble, if it has a, it's kind of, if you're here, if you look at this, is it making a top, right? So a lot of people are shorting here, thinking this might have a correction, but it didn't happen. You can see that. Basically, everyone got squeezed. Everyone got forced to cover from 47 to 58. That was a, let me see, what move is that? A 24% move, and happening in a very short period of time. Happening, 1, 2, 3, just 3 days. Everyone got squeezed, and then you can see that this thing just came down. And that was it. That was the top, right? So you have to be aware of this kind of scenarios happening in the market. It could be a fake breakout, and it's hard to tell. So for example, here we also have a consolidation. People are shorting, and then we have a spike up. Basically, our short seller got squeezed here. It got gapped up. Imagine you're holding a short position here. Pretty scary when the price goes vertical against you. I think you're probably gonna have a stomach ulcer because the price going against you feels like, you know, something out of your control. You're gonna feel it's gut wrenching when this kind of move happens. If you're short sellers, it's absolutely horrifying actually when this happens to you. If you have a massive short position, then you can see that literally this is a very pointy top, came down, kind of go back, came down massively, filled the gap, came back again, and couldn't obviously go above it because by this time all the short sellers are covered. So when the price comes back up, it's mostly the long positions are pushing the price up, right? There's no forced covering, there's no short covering here, and because of long positions, long buyers, they have limited arsenal first of all, and also the smart money are not buying at this point, and also there's no forced covering, there's no forced buying from the short sellers, so you have a very you have a much you know, rational group of people buying shares. For example, here when the price caps up, the short sellers are basically, they became price takers, right? The price goes vertical against you, you're trying to get out and you don't even care about the price you get filled, because all of a sudden you have like 20% down in your portfolio. You just don't care. You just want, the pain is so great and you want to just get out at whatever price you want. You can, and this is exactly why the price goes vertical against short sellers in these kind of market moves. And then you can see the price literally just collapse. So if you're a short seller and you got forced to cover here, you gotta squeeze out, right? That's called squeezing. Your you know, your thing is getting squeezed really hard, and you are forced to liquidate everything. Then the price, basically the market collapse right after, and that's too bad. You're not in this move anymore. You're not in the market. A lot of people probably got covered here and they couldn't get back in, and then the market broke apart. And that would be a very nice gain actually to the short seller. That's a 59% move to the downside. So if you were able to hold through that 20% move, your reward is a 60% reward. And this kind of scenario happened pretty often in the market. So so we could have in the Ethereum market, like this move, maybe we shouldn't trust it. That's my opinion, right? Maybe this thing's gonna break down, fall apart, right? Maybe it's gonna do this, just like Microsoft, just fall apart. It could happen. So I'm not trusting this move. Obviously, I have my Ethereum long position. I'm not selling them. I'm holding them on long term, but I'm not adding more positions at this level, expecting this to break out to the massive move to the upside. I'm still looking for something healthier. If the price comes down, forming a consolidation here, consolidates here, attracting more buyers, allowing more people to buy this asset. So more strong hands can hold down to this asset, then this asset is going to go up massively in the long run, right? These kind of vertical moves is not healthy for Ethereum, just not, right? Look at these kind of vertical moves. They all fall apart. They all fall apart, and they always fall apart almost. These kind of vertical moves, and they're not good for the long term. Anyway, so that's all I want to talk about today, and see you next time.